Have a good day. So let us learn today how to solve a full-fledged problem in holding company. So today focus is going to be preparing a consolidated balance sheet of a holding company. Right? So that's what today's focus is going to be. Till now we have learned what are the basics of holding company, what are the important calculations required or workings to be done for preparing the consolidated balance sheet of a holding company. Now a balance sheets of two companies has been provided. So one is H Limited and the other one is S Limited. The balance sheet is prepared is on 31st March 2010. Now, H Limited acquired the share on 1st April 2009, on which date the general reserve and profit and loss account of S Limited showed the balance of rupees 40,000 and rupees 8,000 respectively. No part of preliminary expenses was written off during the year ending 31st March 2010. Now, you are requested to prepare a consolidated balance sheet of H Limited and its subsidiary S Limited as on 31st March 2010. So now, before getting into a sum, we need to go through all the assets and liabilities and understand where do we need to pinpoint all our workings. Now if we take from asset side, we have fixed assets of rupees 3 lakhs in H Limited and 1 lakhs in S Limited. Second, 60% of SaaS in S Limited at cost, which means investment of H Limited in a subsidiary company. The third, current assets to the sum of rupees 2,76,7,600 and 2,39,000. The last one is preliminary expenses. For H Limited there is no preliminary expenses, whereas in S Limited we have a preliminary expenses to the tune of rupees 6,000. So altogether we have the total assets of H Limited is 7,40,000 and for S Limited rupees 3,45,000. Apart from that, we have list of liabilities. Share capital. In H Limited, 5 lakhs to this amount of shares they have, each rupees 10, and everything is fully paid. The same way, S Limited also is having to the sum of rupees 2 lakhs. Under the share capital account, that also have rupees 10 each, which are fully paid up. And the general reserve rupees 1 lakh in H Limited and 50,000 in S Limited. Profit and loss account, it means the accumulated profits happened over a period of time, that in H Limited to the sum of rupees 60,000 and in S Limited to the sum of rupees 35,000. And the last creditors. In H Limited it is rupees 80,000 and in S Limited it is rupees 60,000. So total of liabilities in H Limited is 7,40,000 and total of liabilities in S Limited is 3,45,000. So with this understanding, let us proceed to solve the sum. Before getting into sum, first we need to see which is the holding company and which is the subsidiary company. And before that, we need to test, do we have the relationship between holding company and subsidiary company in this company. So what is holding company? When the relationship comes into the picture, then a company acquires more than 50% of its shares from the other company. Now we need to check this condition. With respect to this condition, we need to check whether the H Limited have acquired more than 50% of the shares in the S Limited. If we check that, yes, in the asset side, it is very well noted that 60% of shares in S Limited has been invested by H Limited. That means more than 50%. So here we can state the relationship. Right? We state the relationship as holding company and subsidiary company. Here, H Limited is a holding company, whereas the S Limited is a subsidiary company. So with this brief introduction, we need to proceed towards the solving the sum. So first, whatever the sums are given, first understand the questions and what are the accounts that exist and how it is denoted in the balance sheet. Second, state the relationship, study the relationship and state between two companies. Is there holding subsidiary relationship is there or not? So based on the acquisition of shares. So if it exists, then only you can take this particular problem as holding company problem. So now we need to proceed towards the consolidated balance sheet of H Limited. So in this, when studying the sum, the share capital of S Limited to the sum of rupees 2 lakhs, rupees 10 each. 10 each in the sense, how many shares? 20,000 shares are there. 20,000 shares. But in H Limited, I invested that amount, rupees 1,62,400, which covers the 60% of shares. That means out of 20,000 shares, 60% is held by the H Limited. It comes around 12,000. That means 60,000, 60% of 2,000, 20,000 shares, you will get 12,000. So H Limited holds 12,000 shares. How much is the remaining? The remaining is 8,000 shares. That is held by the S Limited. S Limited in the sense outside shareholders. That means minority people, because they are holding only 40% of the shares of this subsidiary company. Hence, the 44% proposal we can call that as minority interest, whereas the 60% proposal we can call this as cost of control, percentage of control. So with this short second stage of introduction, first stage we learned what is balance sheet, how it is listed out and how it reveals. Second, we established the relationship between the H and S Limited and what it is. Third, we came to know what is the cost of control and what is the minority interest proposal, because we have shares secured by the H Limited as well as shares secured by the outside shareholders from S Limited. So it comes both cost of control 60%, minority interest 40%. Now let us get into the additional information. The H Limited acquired the shares on 1st April, on which day the General Reserve and Profit and Loss Account of S Limited showed a balance of rupees 40,000 and 8,000 respectively. But what is now? What is now? Now it is little more than that. Now they have 35,000, 50,000 and 35,000 respectively. But at the time of acquisition, the profit was less. The accumulated profit as well as the General Reserve was less. That means a year before. That's why they gave this additional information. Then no part of preliminary expenses was written up during the year. So that's why this additional information is given as on 31st March 2010. Now, first step is that we need to calculate goodwill or capital reserve. Second, we need to calculate minority interest. So for this, we need to know what is the extent of capital profit we have and what is the extent of the revenue profit of the subsidiary that the H Limited is having. So we need to differentiate and calculate and differentiate between the capital profit and the revenue profit. So this helps a lot for us to calculate goodwill as well as minority interest. Now let me request you to focus on calculating capital profits of the subsidiary. So now from the balance sheet, take the items belonging to capital reserve, capital profit. So what is capital profit? Let me draw your attention towards this. So we already discussed in the previous lecture in the introduction about the capital profit and revenue profit. Even I was raising a question in which chapter we learned this. I am asking in corporate accounting. In corporate accounting in our syllabus, the your Swayam platform, which chapter you learned this, which means identifying capital profit and revenue profit. Yes, some of you knows this better. You post in the comment. Very good. In the unit 3, we learned particularly the profit prior to incorporation. The profit whatever gained before the date of incorporation, we can call that as a capital profit. When the profit comes after the incorporation date, here you can call the incorporation in the sense in the holding company you can call as acquisition of shares. Here already company is incorporated as H Limited, but now H Limited is acquiring shares. So now instead of incorporation you can say before acquisition and after acquisition. So whatever the profit we gained before the acquisition, so we call this as capital profit, and the profit whatever we gained after the date of acquisition of shares by H Limited, we can call this as a revenue profit. Now let me draw your attention towards the items related to capital profit. So we have two items, but not from the balance sheet. Of course, we have both items in the balance sheet, but take these two items from the additional information because the balance sheet is given as on 31st March of 2010, whereas the acquisition happened by the H Limited from S Limited. The acquisition happened in the year 2009 itself, the 1st April 2009. So the capital profit, it happens only as on the date of acquisition of shares. So during that date, what is the value of general reserve? What is the value of profit and loss account? So that is where you need to focus. So here, that's why they gave additional information as the balance of general reserve and profit and loss account is on 1st April 2009. They did not that. So that's purpose they have given. Good. So now take general reserve from the additional information. Why it is from additional information? Because the balance sheet is given only after acquisition of business, after 1 year of acquisition. That's why you need to take the general reserve and profit and loss account from the additional information. So the general reserve from the additional information is 40,000. Profit and loss account is rupees 8,000. So totally we have 48,000. Now we need to subtract the preliminary expenses. So what is the preliminary expenses which we did not write off? So they specifically said the balance sheet, after the balance sheet there is an adjustment. What is that? No part of preliminary expenses was written off during the year 2010. So it means whatever the preliminary expenses is existing in S Limited, that is only from the previous year. That means before acquisition it exists. We did not write off anything during this year. That's what the additional information says. No part of preliminary expenses was written off during the year. So what happens now? The entire 6,000 which is shown in the balance sheet as part of preliminary expenses need to be adjusted in the before acquisition of shares period itself. So now we have general reserve 40,000, profit and loss account 8,000, total is 48,000. If you subtract the preliminary expenses, why do we need to subtract the preliminary expenses? Because it is an intangible fixed assets which have been spent earlier by the subsidiary company before acquisition of the business. It's not a real assets. It is a fixed assets. And it is an expenses made by the S Limited either in the beginning of the company's promotion or in the green period, but it happened to be before the acquisition of business by H Limited. Hence, preliminary expenses, the entire 6,000 have to be written off, or otherwise we can say the preliminary expenses, the entire amount need to be subtracted. So now, if we take general reserve 40,000, profit and loss account 8,000 minus preliminary expenses 6,000, we will get the net result as 42,000. Now this 42,000 we can call this as capital profit of the subsidiary company. Capital profit of the subsidiary company. So now we will step into the calculation of revenue profits of the subsidiary company, which means the profits earned after the acquisition of shares. No, sir, already the profit is stated in the balance sheet itself. Yes, but that is accumulated profit, not the profit of this particular current year. So always we used to have a doubt, because profit and loss account is there in the balance sheet, liability side, and it shows as the balance has rupees 35,000 in S Limited. Can't we take that entire for 35,000 as revenue profit? No, because this 35,000 is the accumulated profit of S Limited. Now we need to find out what would be the revenue profit that generated during this year. That means after the acquisition of the business. After acquisition of the business, that is important. So now what we need to do, open a ledger account, that means profit and loss account. Open the profit and loss account. Write the balance, opening and closing balances in this profit and loss account ledger. You all know how to prepare that profit and loss account ledger. Yes, you must be knowing. So profit and loss account is a ledger taken from liability side. All liabilities, ledger accounts, the balance starts in the credit side. All assets, the ledger account balance starts in the debit side. Because we all know the basic accounts. So liabilities, credit balance. So the opening balance starts in the credit side. What is the opening balance of profit, which is given Closing balance is there in the balance sheet itself, 35,000. Here is the opening balance. The opening balance is given after the balance sheet has additional information, so which we use to calculate the capital profit. That is the opening balance of profit and loss account. It means it was happened to be before the acquisition of shares. So 8,000 is the opening balance. After the 8,000 in the credit side of the profit and loss account, and the closing balance have to be put up in the debit side as balance carried in the profit and loss account. So what is the closing balance? Closing balance is there in the balance sheet, liability side, profit and loss account, 35,000. Close that at 35,000 in the debit side. So now we have credit side 8,000, debit side 35,000. Now it should get tallied, then only the balance comes. So whereas the credit side 8,000 is there, debit side 35,000 is there. Yes, there is imbalance is there. So what happens in profit and loss account every year? So how the general reserve is created? Every year from profit and loss account we transfer some amount to general reserve based on some percentage or based on some ideology. The company used to transfer some amount of the current year profit to general reserve. How much it is? So for that, we can again go to the general reserve account in the balance sheet. That is 50,000 is shown. Are you able to see? That's why I am showing the balance sheet to you. So general reserve is 50,000, whereas the opening balance, that means before the starting of the financial year, the existing general reserve was rupees 40,000. This has been given in the additional information as 40,000. So 50,000 is the general reserve current year balance. 40,000 was the general reserve previous year balance. Now, how much has been increased or decreased? Yes, it has been increased because last year it was 40,000. Now this year balance sheet shows this as 50,000, which means 10,000 has been transferred from the profit and loss account to general reserve. So in this background, let me post two general reserve account in profit and loss account, ledger account in debit side. So take that balance profit and loss account, ledger account, go to debit side to general reserve, transfer to general reserve rupees 10,000. Are you able to follow my words? If not, I will give you another way of explanation for this. When you open the profit and loss account, debit side and credit side we always start with opening balance, debit side we always come out with closing balance. In between, what are the transactions that happen? The only transaction happen in this company is transfer to general reserve. So transfer happens is the debit or credit side. Any liability starts with credit balance. Whichever reduces the liability, then it has to be debited. Whichever increases the liability, then it has to be credited. So now, since you are transferring the general reserve from profit and loss account to the reserve account, so here the profit and loss account reduces, the balance of profit and loss account comes down. So what to do now? So since it comes down, we need to debit. Why it is debit? So some students used to write debit side to reserve account, transfer to reserve. Why it is debit? Why not credit? So that is most important in appearing the MCQ test. So it is debit because it reduces the profit and loss account, it reduces the liability. So credit side we have 8,000 as a opening balance, debit side we have 35,000 as a closing balance. Apart from that, we have a general reserve that is the 10,000 which is transferred during this year. So now if we balance on debit side, we will have a total of rupees 45,000. Credit side we will have only 8,000. So 45,000 to 8,000. Some difference is there. The difference is called as profit for the current year. This difference is called as the profit for the current year. That difference is we can write in the credit side by profit for the year. So what is the difference? 45,000 debit side, credit side 8,000 opening balance. We subtract, we will get 37,000 as profit for the current year. This 37,000 is called as revenue profit of the subsidiary company. So simple to calculate the revenue profit. In the earlier sums, the previous sums, whatever we discussed, it directly has given what is the current year profit. So we no need to worry about calculating the revenue profit. But here they did not give you the direct profit earned during this year, that is after acquisition. But here they gave opening and closing balance and general reserve. So by taking this into our account, we calculated the profit for the period by balancing the profit and loss account. So now we have calculated the revenue profit. So the capital profit is rupees 42,000 and the revenue profit is rupees 37,000. So with these brain workings, so I hope you are able to follow and write all the workings in your notebook. I will reveal the answer after explanation. I will reveal the consolidated balance sheet after the entire explanation for your verification. And later you can copy. But now you go through all the calculations in the notebook. So now, what is the second step, next step? So now we have calculated what is the capital profit, what is the revenue profit. Capital profit comes to rupees 42,000 and revenue profit comes to rupees 37,000. Now what is the next step? Only two steps we have. One is calculation of goodwill or capital reserve, and the other one is calculation of minority interest. For these two, we need capital profit and revenue profit. So we have did this workings. So capital profit, take general reserve of before the date of acquisition and profit and loss account before the date of acquisition, and that if there is any fastidious assets, subtract. If there is any loss during the revaluation of assets at the time of acquisition, subtract. If there is any profit during the revaluation of assets at the time of acquisition, then add. So thereby you can come to a conclusion of total capital profit. Revenue profit is so simple. Take the opening balance of the previous year and closing balance of the current year. And in between, if there is any transfer in general reserve, there is a transfer because general reserve current year it stood 50,000. The previous year it shows 40,000. So 10,000 has been increased. How the general reserve increases? Because someone had transferred from the current year profit to general reserve. So that's why we've taken 10,000. So we opened the profit and loss account, mutual account. Credit side we have kept opening balance of profit and loss account, that is at the time of acquisition it was 8,000. The credit side we have two accounts. One is closing balance of profit and loss account 35,000, which is taken from the balance sheet, and transfer to general reserve is 10,000, which has been aligned by subtracting between the closing balance of general reserve and opening balance of general reserve. So altogether we got 10,000 as a transfer from the current year profit. So with this, let me balance the profit and loss account ledger. If we balance that, we will get the profit for the year is 37,000. This profit for the year is termed to be as revenue profit. Is termed to be as revenue profit. Now let us proceed towards the calculation of goodwill, or we can say as the calculation of cost of control. So how to calculate that? As we have seen in the earlier lectures, lecture number 2 and 3. Lecture 2 explains about the calculation of goodwill. Lecture 3 explains about the calculation of minority interest. Now in this lecture we will be seeing the entire consolidated balance sheet of the holding company by incorporating both the calculations. So now calculation of cost of control, or we can call this as goodwill, or sometimes capital reserve may also occur instead of goodwill. When the goodwill comes or when the capital reserve comes, goodwill arises when the investment value is more than the net asset realizable value of the subsidiary company. If it is more, which means we have paid more into the reputation of the company, that reputation is termed to be as goodwill. Suppose if we may have made investment by lesser amount than the fixed assets value, than the net asset realizable value, than the intrinsic value, less than that, then the difference comes in negative. That negative we call this as capital reserve. So if you take any sum, it used to be either capital reserve or goodwill. The calculation. So now what we need to do? Now let us proceed to calculate the value of goodwill or capital reserve, whichever may come. Now for this, the prime part is how much amount paid. That means investment made for 60% of shares in subsidiary company by the H Limited. So here it is directly given in the balance sheet asset side as investments in which 60% of shares acquired from S Limited as rupees 1,62,400. Then less the net realizable assets value, then if you subtract that, you will get the value of goodwill. So what is have to be subtracted? What is the real value of that paid expense? That means 60% of the shares from S Limited amounts to. So now the balance sheet shows in S Limited the share capital value is 2 lakhs. 2 lakhs, is it not? Right. Isn't it? So of that 2 lakhs, calculate the 60%. Subtracting first subtracting. So 60% is 1,20,000. How it has been arranged? 2 lakhs share capital value in S Limited. Of that 60%, that means cost of control, the control over the subsidiary company by the H Limited 60%. That means 60% of the shares they have got. So So 60 percentage multiplied by 2 lakhs, you will get 1,20,000. This is the first subtracting item. The second subtracting item is 60 percentage of the capital profit. So what portion of the capital profit goes to H limit? That means profit period to acquisition of the business. So just now we calculate capital profit by adding previous year general reserve and profit and loss account, and then by subtracting the preliminary expenses. We got 40,000 plus 8,000 minus 6,000. We got 42,000 as capital profit. Of this 42,000, this 40,000 is your profit gained before the acquisition or as on the date of acquisition. So in this, 60 percentage have to be subtracted as a capital profit. So 60 percentage of this of 42,000 is going to be 25,200. 25,200. So of this 25,200 goes to H limited. Portion of H limited on capital profit is 42,000. Of this, 60% is the portion belongs to H limited. That is 25,200. So now amount paid for 60% of shares, which is taken from balance sheet, is rupees 1,62,400, and amount realizable that has to be subtracted. One is paid up value of 60% of shares of S limited, that is 1,20,000. Then 60% of capital profit, that is profit prior to incorporation, or here we call this as profit prior to acquisition. Here profit prior to acquisition, it comes around 42,000 of this 60%, 25,200. So total subtracting item, or we can call this as net realizable asset value of S limited at the time of acquisition was 1,45,200. Now amount paid is 1,62,400. The realizable value of asset was 1,45,200. That means we paid extra. H limited have paid extra more than the net realizable value. So since they have paid more, it is called as goodwill. It is called as goodwill. So the differences we can call as goodwill. So I request you to calculate and find out the difference between 1,62,400 and the total net realizable value, which we have calculated on paid up value of 60% shares and 60% of capital profit, together 1,45,200. Hence, the difference between 1,62,400 and 1,45,200 is called as goodwill. So by the time you must have calculated the value of goodwill, and I request you to post in the comment. The time I can track that you are watching the YouTube my lecture notes, and you are able to solve the answer, and simultaneously you are able to post in the comment. Calculate the goodwill and post in the comment. So before the webinar, the faculty will review that. How many of you have watched the video? How many of you have some clarification or doubts? How many of you were able to solve along with that lecture? So now we have completed the first part, the first main part, that is calculation of goodwill to 17,200. The second part of our workings to be minority interest. How to calculate the minority interest. So please refer the lecture note 3 is purely on calculation of minority interest. So how to calculate minority interest? We have only 3 steps. 1. Paid up value of outsiders in S Limited. Add capital profits belongs to the outsiders and revenue profits belongs to the outsiders. Subtract capital loss goes to the outsiders and capital profit, revenue loss which is accounted for the outsiders. The minority portion is. So only thing, paid up value, add capital profit belongs to outsider or revenue profit belongs to outsider. We subtract capital loss or revenue loss belongs to outsider. So the balance we call as minority interest. The balance we call as minority interest. So calculation of minority interest. The paid up value of 40% shares of S Limited. So how does that 40% arise? That is the minority portion. We need to first calculate that. 60% of shares were acquired by the H Limited. So remaining must have been acquired by the outsider. Simple logic. So remaining 40% cannot be held by the H Limited itself. If it is so, then it should have been in the balance sheet. So remaining 40% have been acquired by the outsiders of S Limited. So that 40% we call as minority portion, minority interest on the company. So now, what is the paid up value of 40% of shares in S Limited? So total value of shares in the S Limited is 2 lakhs. Of that, what is the 40% of shares? The 2 lakhs is taken from balance sheet, which is given now, which is shown now. The S Limited balance sheet shows equity share capital fully paid rupees 10 each to the sum of rupees 2 lakhs. Of this, 40% belongs to the outsiders. 40% belongs to the outsiders. So in this case, the 40% of this 2 lakhs is the minorities portion. So what would be the 40% of 2 lakhs? Yes, 80,000. So simple. 4 2s are 8, so 80,000. And now, as I said now, add capital profit and revenue profit belongs to that minority people, outside shareholders. And if there is any capital loss or revenue loss, then subtract which belongs to the outside shareholders, that is minority people. So now what we need to do to calculate that, first add capital profit and revenue profit and then subtract capital loss and revenue loss. But in this sum we have only capital profit and only revenue profit. There is no capital loss, no revenue loss. We neither have no capital loss nor the revenue loss. Even capital loss we have as part of preliminary expenses, but it has been adjusted along with the working itself. That's why while calculating the capital profit, we added the general reserve of the previous year and profit and loss account of the previous year, and then we subtracted the preliminary expenses. The last person we subtracted there itself. That's why the net capital profit is rupees 42,000 and the revenue profit is rupees 37,000. So now, what is the portion belongs to minority people, that is outsiders, in the subsidiary company? So now, 40% of capital profit belongs to the outsiders, that is the minority people. So total capital profit is 42,000. Of this, 40% belongs to the minority people. Right? So 42,000 in this 40% comes around 16,800. Comes around 16,800. Similarly, let us calculate the revenue profit which belongs to the outsiders. So now, out of the revenue profit, 37,000 which we calculated as a working amount. So from that, 40% need to be taken. So how that 37,000 was prepared and calculated? We opened profit and loss ledger account and posted the opening and closing balance as well as the transfer to general reserve. The balances came out of that ledger account is treated as profit for the current year, which is termed to be as revenue profit. So of that 37,000, 40% if we calculate, it comes around 11,800. So now, if we add all these three, paid up value of 40% of shares in S Limited, 80,000, 40% capital profit, rupees 16,800, and 40% revenue profit, rupees 11,800. So the total now is called as minority interest. I request all the candidates who are watching this video, and I hope you are able to solve my notes and explanation in your notebook, and I request you to post the result on the calculation of minority interest in the comment box. So the Swayan platform will make you to view this video through YouTube, and under that there is a comment option is there. I request you to post the calculation of minority interest. So I'd like to see how many of you are traveling along with me. Yes, I could see a few answers now itself. Very good. Excellent. Good. Please proceed and tell me the value of goodwill as well as the value of minority interest. These two answers must be ready. Right. So now what we need to do? Some students, intelligent students who studies some other courses along with BCom, they used to come out with alternative methods for calculating minority interest. Yes, there is a possibility to calculate the minority interest through different pattern. So this, what I explained is a small similar pattern, but briefly you can do that like a shortcut. But there is a detailed manner also we can calculate the minority interest. So what to do here? Here what we need to do is take the paid up value of shares belongs to the outsiders in S Limited and the general reserve which belongs to the outsiders in S Limited, and then add 40% of profit and loss account, that means which belongs to the S Limited, outsiders of S Limited, and then subtract any kind of losses. And then it can be subtracted which belongs to that outsiders of S Limited. So here the paid up value of outsider shares of S Limited is 40 percentage, because 40 percentage we already arrived, because in question itself it is given 60 percentage by H limited, so remaining 40 percentage it must be from X limited. So now total value of the share is rupees 2 lakhs. Of that 40 percentage is 80,000. Very good. As we have done earlier, same way 80,000. And then now add 40 percentage of general reserve as on 31st March. You can take as on date. You don't need to worry about what is the capital profit portion, what is the revenue profit, what was the before acquisition, what was the after acquisition. You don't need to worry. It can be together, because for calculating goodwill only we need to see before acquisition, whereas for calculating minority interest you don't need to worry about capital and revenue distinction, because for the minority interest it happens to be only because they were existing for a long term. It was not that they acquired these goals as just a previous year. So they were existing for a long time. So you can take total general reserve as it is from the balance sheet. So 50,000 is the general reserve and 35,000 is the profit and loss account in the balance sheet. These are accumulated amount over a period of time. So now what we need to do, of this 50,000, what is the 50 percentage value? Is that 50,000, the 40 percentage value is rupees 20,000, and then 35,000, the 40 percentage value, that is profit and loss account, accumulated profit. Out of 35,000, what is the 40 percentage? 14,000. If you add all these things, you will get 1,14,000. And then, did you get 1,14,000? Yes. 80,000 plus general reserve towards the outsiders, 20,000. Profit and loss account belongs to outsiders, rupees 14,000. So altogether it comes around 1,14,000. Now subtract the preliminary expenses portion which belongs to outsiders. Preliminary expenses portion was rupees 6,000, which belongs to outsiders is 40 percentage. So of this 6,000, 40 percentage is 2,400. This has to be subtracted. This has to be subtracted. So if you subtract this, you will get 1,11,600. 1,11,600. This is called as the minority interest. Either of these both way we can proceed. Either of these both, any of this way. Right? So first way, if you like this, you may proceed. Or no, I'd like to do the detailed way. The alternative method also you may proceed with this. Now, altogether we have goodwill calculated to the sum of rupees 17,200 and minority interest that we have calculated rupees 1,11,600. So now we will be preparing consolidated balance sheet of H Limited and its subsidiary S Limited as on 31st March 2010. So in the consolidated balance sheet preparation, I will tell you how to consolidate this. So simple. I will tell you first, accordingly you may proceed, then I will reveal you the answer. Right? So simple. And take the asset side, both H Limited and S Limited, and together, and take the liability side, H Limited and S Limited, and add both with respect to which belongs to H Limited portion alone. Right? So in this case, we can prepare the consolidated balance sheet as I am showing in the screen now. So what is that? consolidated balance sheet. Can you see? And now let me show you the detailed balance sheet of H Limited and its subsidiary S Limited as on 31st March 2010. So now I will take you by one. Take the liability side. Share capital of rupees 10 each, fully paid up rupees 5 lakhs, which is held by the H Limited appropriately. Second, minority interest, which we have calculated, it has to be sold as a current liabilities under the liability side. So what are we calculated? Which means the outsider's interest in the subsidiary company with respect to share, with respect to general reserve, with respect to profit and loss account, etc. So altogether, the minority interest portion is rupees 1,11,600. Now, general reserve is rupees 1 lakh. General reserve, which is there in the balance sheet, that has to be taken as it is from the H Limited. S Limited we can ignore because that we have segregated into capital profit and revenue profit. Then we used that amount for calculating goodwill as well as minority interest. So take only the H Limited portion. Take only the H Limited portion. Right? So now take the general reserve as it is from the balance sheet of H Limited, and then profit and loss account. In this H Limited profit and loss account, which means current year profit, is rupees 60,000, whereas the S Limited balance sheet, they have the revenue profit rupees 37,000, which we have calculated. Of that 37,000, we need to take only the 60% which belongs to H Limited. So 37,000 of that 60%, we get around 22,200. Already H Limited has their own revenue profit to the sum of rupees 60,000. Now S Limited's revenue profit portion of H Limited is 60% of 37,000. We get 22,200. So altogether the profit and loss account shows in the consolidated balance sheet is rupees 82,200. Is a total of 60,000, which is the direct revenue profit of H Limited, and 22,200, which is the 60% portion of the revenue profit from S Limited. So altogether, the profit and loss account has a balance of rupees 82,200. Then creditors, H Limited 80,000 and S Limited 60,000. Just add both and keep it in the outer column. So we have 80,000 in the balance sheet and 60,000 in the S Limited balance sheet. Add together, you will get 1,40,000. So if you add all the liability side, we will get the amount, the sum of rupees 9,32,800. Now, slowly we move towards the assets. In assets, so what are the things to be learned in assets? In assets, the first one is goodwill, which we calculated. So goodwill we calculated to the sum of rupees 17,200. Other fixed assets, which is held by the H Limited and S Limited. H Limited fixed assets 3 lakhs and portion of S Limited fixed assets 1 lakh. So total fixed assets 4 lakhs. The current assets also similarly like this. H Limited and S Limited. Add both 2,77,600 and 2,39,000. So we will get 5,16,600. So that's how. In asset side only we have 3 things: goodwill, fixed assets and current assets. So altogether it comes 9,33,800. So this is how the consolidated balance sheet of H Limited had to be prepared along with subsidiary company S Limited as on a particular date. So in this balance sheet, simple things what we have to do is add both the assets and both the liabilities, which is from outsiders. So assets, take both fixed assets, current assets, add together. Do not worry about revaluation, etc., because everything have been done at the time of acquisition, not now. And goodwill we have calculated, right, that as 17,200. In liability side, we have to take share capital of H Limited only, because the balance goes towards the goodwill as well as the minority interest. So minority interest is the portion of the outsiders control on the subsidiary company. The general reserve, take both the general reserve, 60,000 and 40,000. Profit and loss account, take the revenue profit of the current year as well as the revenue profit of current year from S Limited only to the portion of H Limited. Creditors as usual can add. So outside liabilities as well as the assets we can add as it is. Put up minority interest and goodwill and put up the revenue profit portion related to H Limited. That's it. Only 4 changes we have made. All other things we have added together. So add fixed assets, current assets, outside liabilities, and as it is. So then goodwill, minority interest. Goodwill post in the asset side, minority interest post in the liability side. And show only the share capital related to H Limited. And post the revenue profit which is belongs to H Limited from S Limited. That means 60% of 37,000. So by this way we can prepare the consolidated balance sheets of H Limited and its subsidiary S Limited based on the particular date. So altogether it amounts to 9,33,800. So you can now copy in your notebook one by one and can practice yourself with many more sums and notes which is given in the particular chapter subject under the Swayam network. I hope you understood and had a great day by learning the goodwill, minority interest along with the preparation of consolidated balance sheet of H Limited and its subsidiary S Limited. Have a good day. Keep the weekend as an excellent weekend by learning the many more things which yet to come. Happy learning.